A massive suicide bombing at Madrasa in Pakistan's Khyber Pakhtunkhwa. Of course, that's the latest information coming in. And we're moving on to another top story that we're debating here. It's a bloodbath that's been seen on Dalal Street with the BSE Sensex plunging over 1,400 points and the Nifty dropping 400 points as well. While the Sensex recorded the worst intraday performance in the current calendar year, the Nifty 50 registered a biggest single-day drop since April 2023 and also the longest monthly losing streak. Here's how much money the investors have actually lost. Now, in fact, as far as today's session is concerned, it was 9 lakh crores that we're talking about in terms of the total loss over the week. 20 lakh crore rupees have been lost. Over the month of February, it is 40.6 lakh crore rupees that have been lost, a whooping amount of money over there that we're looking at from the perspective as far as investors are concerned. The Nifty suffered its longest losing monthly streak since its inception in 1996, registering its 5th consecutive month of loss. The most prolonged losing streak occurred from September 1994 to April 1995, during which the index fell by a staggering 31.4% over 8 consecutive months. But that was before Nifty's launch on the 22nd of April 1996. In the last 5 months, the Nifty has fallen by 14.28%. And this unprecedented slump has wiped out 93 lakh crore in investor wealth since the market peaked in late September. We'll take this across to experts joining us when we're also requesting our viewers to join us and share with us your questions for the market experts.
You're watching the News Hour at 10, debate number 2 on Times Now, Super Prime Time.
And joining us is Deepan Mehta, Director of Elixir Equities, member of NSE and BSE. Amrish Balika is a market expert joining us as well. Thank you so much, gentlemen, for joining us. And certainly all of our viewers, many of them who, of course, invest at their own level for their own savings. All of us, of course, put in money in mutual funds, SIPs, so on and so forth. Deepan Mehta, let me begin with you. How much of this is short-term? How much and what really would your advice to, the common citizen be, the middle-class investor be, in terms of how worried they need to be as far as this slide is concerned? Is it something that we're looking at that could potentially be a trend that would be there in the middle to long term as well?
Yeah, good evening and thank you for having me on your show. See, I think it's difficult to call bottoms in any market, and typically stock markets always go to the extremes. But as we speak, I think our valuations are about the levels we saw back in October of 2023. And from that point of view, I think market bottoming process has started. And if you're an investor who still has faith and conviction in the market, these are great levels to start investing for the long term. You may have to take some more knocks, but nobody can really call the bottom over here. But these are great levels to get into good quality business, which are now available at reasonable valuation. So I'm not perturbed. And I know it's been the longest streak in terms of monthly losses. But actually it is down, Nifty down only 15%. And we have seen worse falls in the past.
Okay, in percentage terms, you're saying there have been worse falls. Let me bring in Amrish Balika as well. Amrish, let's try and analyze this from the perspective of the reasons. One, of course, is Trump's entire tariff positioning, which has led to a lot of uncertainty. And we certainly don't know which way that's going to cut or help or how it's going to play out. There's also the struggle as far as IT stocks are concerned. There are data jitters as far as GDP is concerned, and a stronger dollar that also puts a lot of pressure. How many of these factors are you seeing as being one of the major factors, and how many of them are likely to continue to play havoc with the stock market?
I think it's a combination of all these factors which actually made the markets move down. I mean, they started moving down from October. I mean, you had the macro numbers which were I think weaker than what investors were expecting. We are talking about the GDP data. I'm not talking about the data which came today, but the GDP data which we have seen in the recent past. The GST collection data, I mean, that was more or less flattening out. We didn't see a good growth out there. More importantly, the earnings, because if you look at the Q1 earnings, I mean, that's when we started seeing that the earnings were softening. But by the time the Q3 earnings came, it was very clear that there is a slowdown as far as the corporates are concerned. The numbers were worse than what people were expecting. And after that, from December, January, we had enough amount of, noise coming from US, from President Trump.
Yeah.
That also created, I think, a lot of...
Mr. Baliga, I'm just going to interrupt you for just a second there. We have some of our viewers joining us. Ved Prakash is with us from Mysuru. Shiv Prakash, I beg your pardon. Shiv Prakash, go ahead.
Yeah, I mean, I am a retired person holding significant stake in market. I have seen through all downturns, be it COVID, be it any other thing. This time around, I mean, one thing that I get quite puzzled is that India as a country is doing well. India is the most populous country in the world. Economy is doing fine. There may be valuations and all that. And suddenly FIIs are going out and everything. I was just puzzled. I just want to know any of your experts.
All right, that's a valid question and we'll get our experts to analyze that. Another viewer joining us is Mr. Chandrasekhar from Bengaluru. Yes, Mr. Chandrasekhar.
Namaste, sir.
Namaste, sir. Please go ahead.
Sir, I want to ask you one question. Is there any necessity of controlling the globalization, sir?
Necessity of controlling globalization. I think that is such a wide-ranging question. I don't know if I'm in any way equipped to say that, but let me take the last question first. Deepan Mehta, do you want to venture a guess or attempt at even answering that question? I think the larger question is how much of this globalization is impacting us, if I've understood it correctly.
See, that's really not in our hands because globalization is a complicated subject and it's best left to the world leaders. All that we can say is that the correction which is taking place is largely account of high valuations which were there in September of 2024 and now they have got largely corrected as well. Valuations and earnings play a key role in the way market moves. And yes, earnings have been slowing down and that's been reflected in the market. And more importantly, I think the overvaluation which was there, that has got corrected. But as of now, I think valuations are coming around to reasonable levels. And with what the government has done in the budget and the RBI with the interest rate cut, we can expect the earnings to start improving with a lag of a quarter or two.
All right. Let's quickly take this other question across to Amrish Baliga as well. Amrish Baliga, we had a retired individual calling in and therefore I want you to answer this from the perspective of those who are retired and would have a significant chunk of their savings in, such SIPs, in mutual funds and in the markets. What would your advice to them be, A? And B, the question that he actually posed is, despite the Indian economy doing well, why is this news coming in of FIIs, etc., pulling out? How would you like to answer those two questions?
Answering the second part first, I mean, markets are all about expectations and delivery. So in the last 4-5 years, the markets kept on moving up as if there is no tomorrow. There were hardly any corrections. Corrections were very shallow. And whenever there were corrections, people bought the stocks. I mean, the market moved up. So a new theory was building up at that point of time that any correction should be bought in and you'll make money. But this time, I think those people who have entered in the last 4-5 years have understood that the markets can correct decently well and your portfolios can show decent losses. But then does not mean that it will move only one way down. Finally, we'll see a decent bounce back. And as far as India is concerned, I don't think, there are any two ways about it, that in the longer term, India as an economy should really perform well. Right. It's only a question that at times we see overvaluation and because of which the markets have to correct. We've seen that as of now. The valuations currently are, I would say, decent, but it's very much possible that we could fall a bit more from here. No one can really bottom till the bottom is made. But then as long as you're invested in good stocks with good mutual funds, there's nothing much to worry. One needs to keep continuing with the SIP, invest more at lower levels. I think that's an opportunity for you, as long as you're willing to wait.
Okay. So long term, don't be impatient. Look at the larger picture. Look at the longer picture. I think that's the larger message going out. Deepan Mehta, Amrish Baliga, I'd like to thank both of you for joining us and explaining this to our viewers.